Welcome everyone to today's Share Cafe ASX Hidden Gems webinar. Whether you're watching via Zoom, LinkedIn, YouTube, Facebook or Twitter, I hope you enjoy today's session. The team at Share Cafe have been very busy scouring the ASX this week and in my view have uncovered some real hidden gems. Remember, in addition to presenting, the executives also want you to ask questions of them. So fire them through using the Q&A box at the bottom of the screen. Right, let's get started. The first company being showcased today is Neurotech International, ASX code NTI, which has a market cap of approximately $42 million. Neurotech is a medical device and solutions company conducting clinical studies to assess the neuroprotective, anti-inflammatory and neuromodulatory activities of its proprietary cannabis strains. Presenting today is Dr. Alexandra Andrews, Chief Executive Officer. Alex, over to you.
Thanks, David. Great to be here. Go to the next slide, please. And the next. So Neurotech is a biopharmaceutical company that is developing these unique neurological solutions to treat a whole range of neurological needs that have been largely unmet. We have got exclusive licenses to develop and commercialize proprietary strains of medicinal cannabis. And we've conducted some extensive preclinical studies on these strains. But more excitingly, we have conducted the world's first clinical trial in children with autism spectrum disorder, utilising our proprietary whole plant strains of medicinal cannabis. We have lodged patents across all the major markets, and we have got, as I said, the potential to treat a multitude of neurological diseases outside of autism, but we are certainly starting with autism as our primary indication. Next slide, please. Our capital structure. So we have got share price now at 6 cents, market cap of 41 mil, and we have 2.3 mil cash in the bank. Next slide. Highly experienced board and management team. Brian Leedman, our chairman, has got extensive experience in the biotech sector. Krista Bates, a lawyer and ex-partner at Lavin Legal, where she headed up the medicinal cannabis group. Professor Alan Cripps, AO, a highly distinguished academic scientist and fantastic body of knowledge there at Griffith University. Winton Willisey and Mark Davis, who've both got capital market experience and business finance. Next slide, thanks. What makes NTI 164, our lead candidate, different from the rest? Well, firstly, we are not just another medicinal cannabis company. I'm sure you've heard a lot about medicinal cannabis companies, and I can tell you that every one that you've heard of before, it's either developing a CBD product or a CBD and THC product. Where we come in and where we're very different and unique is that our product is very rich in these minor cannabinoids. So CBDA is the main component, but we've also got other minor cannabinoids like CBDG and CBN, and these are rarer. Because it's a whole plant, it also includes terpenes and flavonoids and other things that come together to create an effect whereby the result is greater than the sum of its parts. This is called the entourage effect, and there's been lots of work done out of Sydney University through the Lambert Initiative that talks about this entourage effect and the way that it works. So it's a little bit, well, it's very different to if you were just to extract the CBD or the THC out of the actual plant. We are using the whole plant, which has a different and more powerful effect. As I said, we've got a patent which was lodged in October last year, and we have got the potential to combine our proprietary strains with other blockbuster drugs in combination therapies. Next slide, thanks. Our preclinical evidence so far has shown us that we are able to reduce neuroinflammation and increase cell viability, increase energy production in the cell, reduce markers associated with neurodegeneration, so things like MS. And what these things are showing us really is that the way that this drug is working is through multiple different mechanisms of action. It's very exciting for us. Next slide. So why target autism? Well, autism is incredibly common. I'm sure you know someone with it. It occurs in 1 in 44 kids in the US. The symptoms of autism include things like difficulty communicating, repetitive body movements, just trouble socializing, and a host of other things. But currently there is little treatment options available for these kids. And the only FDA-approved drug is called risperidone. And that's an antipsychotic with pretty nasty side effects. So commonly things like digestive issues and weight gain, breast growth in little boys and girls. It's pretty horrible. And as you can imagine, these kids have already got enough issues. So the other drug they often prescribe is Ritalin, which creates anxiety and trouble sleeping. What parents are left with is the choice to either continue these drugs with the terrible side effects or to take them off. But what we do know about NTI-164 is that it's very safe and well tolerated. We announced our safety data last month, and I can talk a little bit more about what our trial has shown on the next slide. Let's go to that, please. Thanks. So our phase 1/2 trial is due to complete any minute now in the next few weeks. We released the safety component of this, which has shown that it's perfectly safe. No adverse events were noted. And since the trial was designed so that there was including a washout period where these kids would come off the drug once the trial had finished. But what happened, and I've never seen this before in my career, is that the parents lobbied the ethics committee at the hospital to say, we don't want to take our kids off this medication. So we had to amend our protocol to allow these kids to stay on the treatment. Now, as I said, we don't know the actual efficacy data at the moment, but those findings will be released to us very soon. All we do know is that the parents want their kids to stay on this drug. So next slide, please. Autism is a huge market opportunity for us. It's valued at 2.3 billion. But there are other markets out there which we plan to tackle as well. I'm very excited about the idea of doing an ADHD trial. We've also got multiple sclerosis, cerebral palsy, where we've done some very preclinical work and continue to work around that. And the combination therapies, that's another very exciting area where we can combine our proprietary strains with blockbuster off-patent other drugs. Next slide, please. We lodged our patents in October last year through RAISE. And though we also conducted an international prior art search, which has really confirmed to us that there's no one else out there doing the same sorts of things. So that gives us great confidence to move forward. And our patents will be confirmed in October, because that's the way that the patent system works. Next slide, please. Our pathway to commercialization. Well, we are very focused on the pharmaceutical pathway to commercialization. That is involving the FDA, of course, and we see this having the most potential upside. I mean, just look at the recent acquisition of GW Pharma by Jazz Pharmaceuticals last year for $7.2 billion US. And that was just a CBD product. We believe our product, our lead candidate, NTI-164, we see that as being really far superior to just a CBD alone product. So that's exciting. What's also exciting, as I've mentioned, is the idea of doing combination work, because that is actually a quicker pathway to market compared to if you were to be developing a brand new drug from scratch. So we got on the 505(b)(2) pathway at the FDA, and we see this as having huge potential upside and really expanding on our patents as well. Next slide, please. Neurotech compared to our peers. Well, it's quite hard to compare us to our peers because these companies are all doing either CBD or CBD and THC products. But we see ourselves as being most aligned with IHL in Canex because they're the only ones doing, to our knowledge, real combination trials with other drugs. So we see ourselves as doing something similar to that. But yeah, as I said, it's quite hard to compare us to peers per se because there's no one else doing what we are doing. Next slide, please. We have got we've got lots happening in the near to medium term future. We're very much looking forward to seeing the results of these phase 1/2 trial coming out this month. And then we've got our FDA pre-IND meeting happening later this year. We've got our phase 2/3 trial starting this year, and those results will be finished next year. So it's a lot going on. We've got a very clear timeline and clear objectives. Next slide, thanks. So to summarize, look, NTI it's got a great board, great management team. We've got a unique product. We've got clinical programs underway and significant near-term and long-term milestones. So that's us in a nutshell. And thanks so much, David, for the opportunity to talk to you and your audience today.
Great presentation, Alex. Really enjoyed it, and clearly you're very passionate about not just the work that you're doing from a clinical point of view, but also the needs that you're meeting with this drug and the people who are being positively impacted from it. So congratulations. Now, in terms of the drug approval, do you have plans to look at Europe and other markets from an approval point of view? Yeah,
definitely. We have got the FDA through the US is our key focus, but certainly the EU, China, we've got our patients that cover us for all those major markets, and we certainly intend to take them there.
And are you seeing patient-led inquiry in some of those other markets? As you said, in the US, while you can't talk to the results as they haven't been announced, the patient feedback is very positive, and in a lot of cases, those patient cohorts internationally talk a lot amongst each other. Are you seeing sort of inbound inquiry from other markets?
Yeah, absolutely. That's one of the interesting things about this area is that compared to a lot of the other research areas that you can do clinical trials in, I've never seen so much inbound interest from patients, from advocacy groups. It makes recruitment really, really simple. And we've been inundated by by requests from big organizations like the Autism Association as well. So certainly internationally and locally, we've had lots of inbound interest, and it does make the clinical trial recruitment period much, much speedier.
And is the hard balance that this is a very clear need, and the people who are impacted by it almost want you to hurry up, and you can't hurry up. It has to be done properly. You have to follow the steps to make sure that when you get to that point where you can actually sell a product and deliver a product commercially, that you've ticked all the boxes. Yeah,
absolutely. It's a lot of pressure too, because you're working with people's lives, and it's children and their parents. So yeah, it's an emotional issue, and it's definitely close to a lot of people's hearts. So there is a lot of pressure to get this done in the shortest time possible.
And I assume there's a lot of excitement as well as of the positive impact that you are making now, but the positive impact you believe this product and others can make to the lives of so many people.
Yeah.
And just to recap the milestones coming up, the flags that investors should be looking for, what are the key milestones over the next 6 to 12 months that investors should focus on?
Well, the main one is really going to be these results that'll be out this month. So that's extremely exciting. And then we're going to be doing some other projects there. So there's combination therapies. There's cerebral palsy, another indication. We've got our pre-IND meeting lined up with the FDA later this year. And we've got where is it? There's so many amazing milestones that will be coming out over the next 6 months. And yeah, I look forward to updating you all and your audiences.
Well, investors love news flow. They love positive impact, and they love management that are driven to achieve positive impact in such an important way. Alex, congratulations on what you and the team have achieved. We look forward excitedly to results, and we don't know what they are, but we do look forward to seeing them drop over the next short period, and then following the success of the company as you continue on your journey. So Alex, thanks for your time.
Thanks, David. Appreciate it. Bye.
Next, we have Etherstack, ASX code ESK, market cap of $58.8 million, thereabouts. Etherstack specialises in wireless communications technologies for customers in the public safety, defence, utilities and mining industries. Presenting is David Deacon, CEO and Executive Director. David, over to you.
Thank you very much, David. If we could just jump forward to slide 4, that'd be great. I've put a fair bit more into this deck for people to take a look at a later point. I'm only going to talk briefly to 10 slides. First 5 slides will be about really who we are and the types of markets we're serving and some of our technology and some of the signature clients and deals that we have. And then the other 5 will focus on our financial performance over the last few years and our growth story. Look, in a nutshell, Etherstack is an established technology business that is profitable. It's growing rapidly. We're debt-free, and we have a very strong recurring revenue base, representing 30 or 40% of our overall revenues just being earned before we get out of bed every morning, which is great. The company is twice as large offshore as it is onshore. We have research and development groups in Manhattan, Reading in the UK, Yokohama in Japan. It's been established there for 15 years. And also our primary R&D group in Chippendale in Sydney Fringes. We specialise in an area of wireless communications called digital land mobile radio, or essential mission critical push to talk. These types of radio networks don't really encounter a lot of them in your life, but they're pretty essential for everything that we do. Police, fire, ambulance, security services, defence organisations, electric utilities. We have a raft of electric utility customers around the world who are clients. So that they sort of form the public safety and the utility sector. And we also have a good exposure to the resources industry for public safety networks or employee safety networks on large resource projects in terms of lots of automated vehicles moving around and other bits and pieces. It's absolutely essential that everyone keeps safe and no one gets hurt. And obviously the added benefit of that is maximising uptime on resource projects. We just go to the next slide. So the 3 sort of grouping areas that we work in. The digital land mobile radio industry on the left-hand side is a $20 billion a year market, dominated by a handful of major players around the world, a couple of North American and several European, and a number of smaller mid-tier players. This area we have been working in for many years, licensing technology to wireless equipment manufacturers, handset and mobile manufacturers in Japan like Kenwood, ICOM, switching vendors in the US, Cisco, defense organizations. And it's really this traditional digital land mobile radio business that is essential for providing the public services that people expect, as well as keeping the lights on with the electric utilities. That is our sort of our key growth area that has been propelling our growth and our profitability in recent years. There are 2 big trends coming along that will be affecting this market. The middle box here is what we call mission critical push to talk, or 4G or 5G cellular specialist devices that Governments are hoping that they'll be able to leverage from the 4G, 5G spectrum that they have provided to carriers around the world, such as the Telstras, the AT&Ts, and so on. And that will have an impact in the urban areas. And we also have been for some years working on satellite push-to-talk solutions with the dramatic crashing in bandwidth price as a result of the LEOs and MEOs going up there. We see also a trend to new products and technology in that area. If we just jump to slide 8, so skip three forward to bingo. So this traditional digital and mobile radio network area is extremely conservative. Almost all of our revenues here are government-backed with extremely long support tails. Often these support contracts run for 10 to 15 years. And so if we take a look at clients like Ergon Energy, the state energy provider in Queensland, ATCO Electric in Alberta in Canada, 3 of Warren Buffett's first energy electric utilities, Jersey Central Power and Light, Allegheny Energy, Mon Power. These are all long-term customers of ours who we've sold the initial equipment in, very high margin equipment that's gone in there. And then we've got a very long support tail that goes, as I say, for about 10 to 15 years, typically is a minimum going forward. And it's that compound revenue growth of every time we put a new network in the ground, we get that extra revenue. I'll come up to a slide a little bit later as we come through, and you'll see how that's been able to really smooth out our revenues, drive profitability to Etherstack, and really unshackle us from a growth perspective going forward as well. Besides electric utilities and public safety, a raft of different defence organisations and really a who's who of the world's defence and wireless equipment manufacturers. We jump forward to slide 11, which is 3. This is the change that's underway at the moment in the 4G and 5G space. This is an announcement related to an announcement we signed, we made with Samsung, who are distributing our technology into the carrier market globally. That deal we signed almost 2 years ago, and then last year we announced the first lead customer being AT&T, the world's largest telco. That was an $8.5 million US deal. We count in US dollars, and we have a 31 of December financial year end. That $8.5 million deal consists of about $6 million in US dollars in licensing, which is a very high margin, as well as the first 3 initial years of support in that initial package. But we expect, like all of our other networks in this space, for that support revenue just to continue on and on ad infinitum. And we're working with Samsung on quite a number of other carriers at the moment in different stages of maturity to get the next deals done. Go to the next slide, please, David. So the space that we're operating there in, there's an upfront licensing fee of circa $2 to $8 million for each carrier win that we get. There's 60 to 90 carriers that are likely to uptake this technology within the next 5 years within the OECD countries alone. That's that top left box. There are many more in the bottom right box around the world who will also get this technology. But our primary target in the short to medium term is the 60 to 90 carriers in developed countries with our partners such as Samsung and hopefully new switching partners that we're hoping to get on board for the technology. We just jump forward to slide 17. We'll jump into some of the financials. And I'll just say that Etherstack has signed direct deals with both Samsung and AT&T, and they're the 18th and the 23rd largest company in the world by revenues. So we clearly have some reach and punch to get out and deliver around the world. These are the financial highlights for last year. Last year we had an 81% revenue growth to $8.5 million US dollars, 142% EBITDA growth. So 2.6 million USD on 8.5 million USD, about a 31% EBITDA margin. We repaid the last of our debt last year, so the company has no external debt, strong balance sheet. We made a net profit after tax of just shy of 2 million Australian dollars or 1.45 USD. And yet again, our year-on-year recurring revenues continue to increase and had fantastic positive operating cash flow for the 4th year in a row. Let's just jump to the next slide. That was, just these are sort of we entered the year with a fantastic solid pipeline for this year and next year. You can see some of the quality of the organisations that we're working with there. UK Ministry of Defence, Australian Department of Defence, Home Affairs here. If we move to the next slide, okay, you can see that in the last 4 years that we've been positive operating cash, positive EBITDA, and now we're really sort of starting to step up. Next slide along. This is really the hidden story or the real story of what's going on. Every time we get one of these networks in the ground, we get these recurring revenue support sort of being long-term recurring support revenues tacked in. So the more networks we've got, the more support revenues that we go. This is extremely high margin support revenue. These networks are designed not to stop. Once we've got the initial fixed base in North America, in Europe and Asia to provide that 24/7 support, all new networks and the support related to it drops directly to the bottom line. You'll also see that we have other recurring revenues, that's the blue part of the box, which are royalties that other companies pay us when they produce products with our technology in them. Sometimes they're a little bit lumpy due to minimum volume guarantees, but overall the trend is continuing upwards quite significantly. We would expect to see quite a jump in this recurring support revenue in 2023 when the AT&T support revenue, which is estimated to be approximately $850,000 USD, kicks in at that point in time. Okay, one more slide and then I'll throw the floor open to any questions. That's just the look at the revenue and gross margin, about 70% across the board. If we just leave it on slide 29, thanks, David. I'll answer some questions. One more, I think. Two more. One more. Bingo. Okay, great. Thanks, David. How can we?
David, a great presentation. I've got a question. So you play in a global space, and some would say, a small Australian company playing in a global space and taking on these much larger players in the wireless communication space. How are you able to compete and win?
Oh, look, it's all the usual ways that people win and compete, which is by providing a better product, superior support, and at a much better cost benefit for the end customer at the end of the day. The biggest barrier to getting into the market is it's just such a conservative market. The Royal Canadian Mounted Police, before they gave us our first network order, had only purchased public safety radio networks from 2 major vendors besides us in the previous 30 years. So when you sort of crack, one federal policing agency in Canada, that makes it easier to do the state, the Drug Enforcement Agency, the State Department in the US. It's very much win, reputation, and then ensuring that we deliver.
And I suppose that conservatism is hard to crack into, but once you're in, you're embedded and can be embedded for a long time.
Yeah, absolutely. It's a very, very difficult space to get into. But these types of networks that they put in the ground, as I say, typically have a lifespan of 15 plus years. So they're big infrastructure projects like Ergon Energy's in Queensland. That's 126 tower sites and microwave linking sections across all of Queensland just to host our technology inside these repeater sites and the core network site. Once you capture those clients, that's why those recurring support revenues are not falling away and just continuing to grow. 28% compound average growth rate over the past 7 years.
So a good question here from the audience, and they're all good questions, by the way. How does the sales process work? So, and I know it must differ from one organisation to another, but can you step us through the sort of gestation period and how the process works? And is it tender? Is it knocking on doors? Is it a mixture of everything?
Yeah, no, very, very good question. The process for government radio networks is a typical bid process, RFIs, RFTs, evaluation, and they're often 18, 24-month processes. So things that we're working on today, we know won't get awarded for another 2 years' time from now in those sectors. And so we've got a combination of growth from adding growth onto the existing networks that we have, plus we're winning more networks, and then wins beget wins from a reputational perspective. We also then have two other faster trends occurring. One is in the utilities and in the resources sector, where they move somewhat faster than in a more commercial manner than some of the public safety agencies going forward. So we've got our first Pilbara win in May 2020, I think it was, for a major iron ore provider. We're now 6 awards later, totaling $2.3 million, in almost exactly 2 years. And then besides that equipment we're shipping, we're obviously also then going to get the 15 to 20% per annum pull-through revenue, compound growth going on new wins that we get in the ground, as well as the recurring revenue that comes through. So the shortest wins really are 6 to 9 months. It's a conservative industry. These are big infrastructure projects, but we're delivering. Our customers like the product and they're coming back for more.
Once you're in. So like you say, it positively impacts your compounding revenue. And I suppose another part of that question is, so you've got an understanding of your pipeline, you can see it out 9, 12, 24 months. Do you have a feel now based on the history you've created of, we know what's in our pipeline, therefore we know X% roughly is what we'll probably get?
Yeah, look, certainly. And, I think we're very confident with the existing growth that we have from our traditional digital land mobile radio business. But this new 5G MCX or mission critical switch push to talk space, this is where we've now got Samsung out acting effectively as a sales force multiplier for us, in that, they've got people talking to 100 telcos around the world, as they're trying to put in their 5G technology into those carriers. At the same time they're trying to put in that 5G technology to their carriers, they're pulling through our new mission critical technology, push to talk technology for public safety, for agencies that those carriers serve. So that initial win last year of $8.5 million USD, we're certainly hoping to see Samsung and other future partners replicate that win rate up quite substantially and quite quickly.
Great presentation. I will leave you with one last question from the floor. And what are the key messages you'd like to leave us all with?
Look, we're a profitable, debt-free, growing Australian technology company. We have fantastic accounts. Reads like a who's who of the world's technology players and defence and public safety agencies. I think it's just a really exciting time for Etherstack going forward, and that recurring revenue, at the end of the day, that's really what's setting us free from a profitability and a positive operating cash perspective.
David, a great presentation, working in a really interesting space with some big players as your partners and clients. Exciting times ahead. Thanks for your time.
Really appreciate it, David. Thank you very much.
Thank you. Our next presenter is Clive Finkelstein, CEO and Managing Director of RPM Automotive Group, ASX code RPM, which has a market cap of around $52 million. RPM Automotive engages in the manufacture, wholesale distribution and retail of tyres and parts and accessories for the transport industry in Australia. Clive, over to you.
Thank you, David, and good day to everybody, and a special welcome to all of those of you who are being introduced to the RPM Group for the first time. Just like to talk about the company for a little while, and moving on, we'll basically the RPM Automotive Group is a leading play in the automotive aftermarket sector. Next slide, please. RPM has a national footprint. We are involved in manufacturing, importing, wholesale distribution of a wide range of automotive parts and accessories, including tires on passenger, commercial and industrial. Let's move on. There are a number of favourable industry fundamentals. Obviously, we're in quite a large industry. automotive sector is enormous. We've recently invested further in the four-wheel drive space. We have a vertically integrated business, as I mentioned earlier, whereby we design, manufacture, wholesale. We do wholesale, or we sell to our retail businesses as well. So as our retail platform grows, so our wholesale business obviously benefits. We have a number of leading brands. We're very well known in the racing fraternity, motorsport being the showpiece, if you like, of the automotive industry. Yeah, as we said, we have diversified businesses. We're across multiple areas. I'm going to get into more detail on this later, so I'm not going to read everything. I know all of you can read, and at any time you can always download this presentation and get all the detail you need. Experienced board, myself and the guys around me have been in the automotive industry for 25 plus years. We understand it well. We understand the space we play in, and we've been doing it for some time now. And we have a clear growth strategy. We understand where the opportunities are. We're specifically in what we call sunrise sectors of the automotive industry, and we are looking to expand all the time, both organic and acquisitional growth. Let's move to the next slide, please. So our business is built on 4 pillars, as we like to say. Wheels and tires, which is a wholesale tire business. We have a number of warehouses around Australia. We import, wholesale and distribute tires out of those different warehouses. We are, well, specialized, if you like, in commercial and industrial tires, commercial being truck and bus, and industrial being off-road tires or mining, agriculture, forestry, and heavy earth-moving equipment. We also do a range of passenger and four-wheel drive tires as well. We then have our retail division, which we call Repairs and Roadside. Repairs and Roadside is basically B2B or B2Fleet retail tire, commercial and industrial tire centers. So we would fit or service fleets of trucks or trucking companies with new tires and wheels. Our motorsport business is a market leader in the space. We do we own our own brand. That's where the RPM brand comes from. We're actually the only FIA approved race suit manufacturer in Australia. So we do custom suits for a number of the top racing car drivers, as well as anyone who would like to have their own race suit that is designed for them. And finally, we have our performance and accessories division, which is both manufacturing, wholesale, and retail. We have all kinds of accessories that we sell through that division, as well as a platform of a franchise group that we have as the distribution platform. Next slide, please. Just a few key salient details, if you like, on the market and the opportunities. The Australian automotive parts and maintenance sector represents about $34 billion in annual revenue. The sector is highly fragmented, and RPM has a strong track record of driving consolidation, but the sector is consolidating, so it is a good time for that. RPM has a vertically integrated business model with increased operating leverage to drive earnings growth. And quite recently, we acquired a business that has greater design capabilities, which we will use in other manufacturing businesses, both internal and external. Next slide, please. Yeah, we have a basic acquisition strategy. We have we basically buy businesses on a formula. I won't go into too much detail of the formula. It's all there for anyone to see, but pretty much we try and identify the correct businesses in the right areas and apply our formula. Just to give you an understanding, in FY22, so this current year, we've completed 8 acquisitions, building on 5 done in the previous year. We've had significant growth, both organic and acquisition or inorganic. Yeah, we have many opportunities to unlock even further synergies. Next slide, please. Just a quick timeline of different businesses that we've acquired this year and some investments we've done. In other words, either greenfields or just expansion on businesses. I think we can move to the next slide. Some of the highlights, FY22 highlights, we've had record growth in revenue and EBITDA, 8 strategic acquisitions to complement businesses that will deliver meaningful cost and revenue synergies. Our businesses are quite similar, so there are a number of synergies that we achieve as we bolt them on. And strong investment strategy to support rapid growth. Just some guidance that we've been able to provide. FY22 revenue targets of in excess of $80 million and EBITDA targets in excess of $7.2 million. We've had 18.5% organic growth this year. Yeah, if you annualize our turnover run rate currently, we're sitting a little over $120 million. The outlook for FY23, we're looking to consolidate a number of acquisitions that we've recently done, just get them down and ensure that we get the value out of them, whether it be through the cross-selling opportunities that we have both in the OEM and aftermarket sectors, or in transferring products through different distribution channels. Further growth opportunities to continue the company's expansion strategy, a focus on earnings growth, specifically in the repairs and roadside and performance and accessories divisions, achieved through economies of scale. So the 2 areas that we focus on, are focusing our growth on, is in that retail tire industry as well as our performance and accessories division. Further improvements in trading conditions as COVID-19 restriction ease and activities increases. Our retail businesses were hurt in Q1 of this year as a result of pretty much Metro Melbourne and Metro Sydney being shut down, but as the years progressed, obviously they've recovered quite nicely. And finally, continued implementation of best practice management in inventory and supply chain. Our business is heavy on stock, and yeah, we do a lot of importing and distribution, and as a result, we need to have the stock when our customers need it. Next slide, please. That pretty much comes to the end. There are some more slides after this, which you guys can go through, giving a little bit more detail on the business and the shareholding and the directors. But I think that pretty much sums up or gives you a good overview of exactly what the RPM Group is.
Thanks, Clive. Great presentation. There are a number of questions coming through. I always love it when a question starts with, "Hi, Clive, I love the presentation." So that's a big tick from the audience. One question is around market share. Do you have an idea what your current market share looks like, and therefore what the growth opportunity is?
Okay, so we're in a number of sectors. So I'll give you the key sector for us is commercial and industrial tires. Commercial and industrial tires, the industry is in excess of $2 billion. To give you an idea, our current wholesale value in that space is in and around the $45 million range. So we've got a long way to go. To be fair, though, we play in a particular sandpit in that industry. So that industry is divided into tier 1, tier 2, and tier 3. Tier 1 would be all the brands that everybody knows, you know, the well-known brands. The tier 3 is Chinese brands, and we play in that space. When we got involved in 2016, the industry, the commercial industry, was about 800 million, and about 20% of that was taken up by the Chinese manufacturers. It's now about 1.2 billion, and about 35% of the space is taken up by Chinese manufacturers. So our industry is growing, but our portion of the industry is growing even faster. So we believe that there's plenty of opportunity for growth there.
That was the point I was going to make, that you're a well-established brand in a growing industry. So the opportunity there is significant across all the different business units that you have at your disposal.
Yes. Just to digress, one of our other companies, Revolution Race Gear, is the market leader in its space. So it has in excess of 35% of the market share. So yeah, you've got two very different businesses there. But as the market leader, all we do is we look to increase the range or the products that we can sell. I like to say more lines on an invoice, effectively. Same customers, just offering them more product.
And in terms of M&A, do you have a capacity, or is there always the ability to either self-fund or bring in funding for the right M&A?
We have a formula that we buy on, and the formula is based on how we get our funding, as well as an earn-out strategy, so that we have the key stakeholders invested. We like to take them along. We believe in cultural fit. We're very people focused, so we think that people make businesses. As a result, it doesn't make sense to buy a business and then eliminate the drivers or the champions of that business, because generally the business goes with them. We've been on that side of the table in the past, and we understand that, and we understand how guys who may own a business that might be too big to be small and too small to be big, caught in that funny zone, how it's quite hard for them to integrate into a bigger organization. So we help them with the transition.
And when you bring a business in, there's obviously the financial, there's the people piece, but do you find that inside your organization, the organic growth that comes from those businesses is much superior to what they would have achieved in their singular form?
Oh, absolutely. So in most of our businesses, we supply, our wholesale businesses supply our retail businesses. So if we buy a business that is already a customer of ours, for instance, we'd sell more product to them. They'd make more margin out of the product they're buying from us, and we'd offer them, we'd cross-pollinate their customer base. So, and added to that, when we set up businesses, we like the vendor to participate in the value we bring. So effectively, if we can make the business make more money, we give the vendor the opportunity to actually participate in that. So super profit performance bonuses.
Understood. Now, just to recap for people, through your growth strategy, what are the divisions you're focusing on from a growth perspective, and why?
So we call the one division repairs and roadside. A better explanation is just our retail tire division, which is B2B or B2 fleet. Our reason for it is coverage. We want to look after our customers better. Our customers, who are generally transportation industry people, would have depots in multiple locations. They'd be using multiple service providers. We want to make their lives easier by offering them service more on a more national level. That's the one division that we've been focusing on. The other one is the performance and accessories division. I said that we joined the tyre industry in 2016. We've been in the accessories industry since 1996. We understand that very, very well. We've seen unprecedented growth in that space over the last 3 or 4 or 5 or 10 years, probably given a shot in the arm by COVID-19, no question about that. However, we don't see that ending. We've invested recently quite heavily in the OEM side of that industry. One of the businesses we acquired is a supplier to caravan and camper trailer manufacturers. We've recently invested in another business that caters to the aftermarket. We believe that we can cross-pollinate both of those product ranges. And we've already begun with the one and have seen some very, very favorable results.
Clive, a great presentation, a really interesting company and a true hidden gem, a company to watch. We look forward to watching your success. Financially, a well-established and very stable company. So congratulations on pulling all of those things together. Fantastic presentation. Thanks for your time.
Thank you very much, David.
Last but by no means least is Metalhawk, ASX code MHK, which has a market cap of around $11 million. Metalhawk is a West Australian mineral exploration company focused on early stage discovery of gold and nickel sulfides. Presenting is Will Belbin, Managing Director. Will, over to you.
Thanks, David. Thanks for joining the webinar. For those of you who haven't heard of Metalhawk, I'll provide you a quick intro. If you want to move on to the slide number 3, there's the disclaimer. So we're a West Australian junior explorer. We're focused on making new discoveries of nickel sulfide and gold in WA. It's the best place in Australia, if not the world, to be exploring for these metals. We have a number of high quality assets and projects in the state. We have a strong pipeline of activity with imminent and pending news flow over the next 6 to 18 months. We have made recent high-grade nickel sulfide and gold discoveries on our ground, which I'll be talking about. If you can move on to the next slide, please. So our projects are located in the Goldfields, the Kalgoorlie region, also further south in the Albany, Fraser and Norseman regions. We do have a couple of joint ventures spanning across 4 of our projects. We have a JV with Western Areas, which is soon to be IGO, or known as Independence Group, and these guys are exploring for nickel sulfide on 3 of our projects. We also have an earn-in agreement with Falcon Metals on the Viking Gold project. Now these JVs really enable us as a junior company to focus on our own one or two projects at a time, but it also enables the company to put a lot of money into the ground without diluting shareholders. And we do have a very expansive portfolio for a company of our size. And move on to the next slide, please. So we do have a small team. We have a low number of shares on issue. We've been listed for about 18 months. We're well supported by our JV partners who are major shareholders, and we do provide our shareholders with great leverage to exploration success, as you can see from the nickel sulfide discovery we made in September last year. So certainly hoping to make more of these. You can move on to the next slide, please. So our Goldfields projects are all located ideally within an hour from Kalgoorlie. The Bearhaven project is our focus, whilst the Emu Lake and Kanowna East projects are part of the Western Areas joint venture. And they've been very active and certainly ramping things up there over this year. Next slide, please. So Bearhaven is only about 20 k's east of Kalgoorlie. We've consolidated over 90 square k's of tenure on this project. since we acquired nickel rights from Horizon Minerals. Early on in the piece, we discovered high-grade nickel sulfide, which really demonstrated the potential of this project and certainly gave us confidence to continue on with regional exploration. We have about 10 kilometres of strike to explore these ultramafic rocks, which are undercover. And certainly high-grade nickel sulfide is what we're chasing. We're about 5 k's north of the Blair nickel sulfide mine. That's where the Commodore discovery was made. And we're continuing to explore along this trend, which has been very poorly explored in the past, partly due to the alteration of the rocks and the shallow transported cover. Next slide, please. So it was only the second RC hole that we drilled on the project that intersected high-grade nickel sulfide. It certainly set things alight as far as our share price. I've got a lot of eyes on the stock. 5.9% nickel is considered very high grade. We followed up this with diamond drilling a few months later. The first diamond hole we drilled hit 3.4 meters at over 2% nickel, and about 50 meters below the nickel sulfide zone, we intersected a zone of high grade gold mineralization, which was certainly a nice bonus. And we've since followed up that gold hit with a small diamond program, which we completed only a few weeks ago. Next slide, please. So we've received about half of the assays results from this diamond program, and each of the holes that have returned so far have intersected significant gold mineralization. This is a great start for this project, and it shows the continuity of mineralization. I mean, we've hit nearly 6 meters at 6.7 grams gold in hole 1, followed it up with 2.5 meters at over 7 grams gold, another 1.4 at 4. I mean, these are great numbers. We'll look forward to reporting the remaining assays when they come through in the next month or two, and then we'll be following up with more diamond drilling. Next slide, please. So the Bearhaven project is a tremendous opportunity for the company. Previously on this project, there's been no mapped ultramafics running through the western side of the tenements, which you can see here on the yellow lines. The Commodore discovery there in the middle has really opened up a significant search space for us, and it's proven the geological model that we've applied to this project. Historically, explorers have really focused around the margins from Blair, the so-called Blair Nickel Dome. So we've challenged this theory and proved successful. So we're continuing to use regional geophysics and drilling to explore for more nickel sulfide deposits. Next slide, thanks. So our focus, and our biggest focus is exploring along the strike extensive Commodore ultramafic unit, and the results at Commodore have given us that confidence and encouragement. About 1.5 k's north of Commodore, we've advanced a prospect called Tirana, where we've hit some extremely encouraging strong geochemistry in RC drilling, deeply weathered rocks. These sorts of values of nickel, copper and PGEs certainly get most nickel geologists very excited. So things like 12 meters at over 0.5% nickel, high copper and PGEs. So we're currently testing this target at depth with more RC drilling, and we'll continue to keep exploring and testing the new targets that we've generated from geophysics and geochemistry. So and that's our main focus at Bearhaven. So if you move on to the next slide, I'll tell you a bit about the joint venture with Western Areas. So they have the ability to spend $7 million over 5 years to earn a 75% share in these projects. Our 25% is free carried to decision to mine. It's a good deal for us. We don't have to put our hands in our pockets. we retain the gold rights on these two Goldfields projects, Emu Lake and Kanowna East, which is Western Area's main focus at the moment. If you move on to the next slide. So Kanowna East is positioned about 10 k's south of one of the highest grade nickel sulfide deposits in the world in Silver Swan. This southern ultramafic has had very little work done on it. Western Areas completed their first round of diamond drilling in March, April. The first hole they drilled intersected over 200 meters with visible finely disseminated nickel sulfide, and this is an outstanding result at such an early stage, and we look forward to the commencement of diamond drilling when they head back there in the next month or so. The other projects in the Western Areas joint venture are a little bit earlier stage, but they're certainly starting to ramp up their activity in the joint venture. If you move on to the next slide. I'll touch on our Norseman projects. We have a big piece of ground on the Viking gold project, which is part of an earn-in agreement with Falcon Metals, which is a spin-off from Chalice Gold Mines. Viking has had some historical, very high-grade hits of gold, very shallow mineralisation. It is pretty light on as far as drilling goes, and these guys are getting ready for their maiden RC program, hopefully third quarter this year, so not too far away. So we really look forward to that. Additionally, we have a project just out of Norseman, which is highly prospective for high-grade gold and also PGE mineralisation. Both of these projects have only fairly recently been granted, so we really look forward to activity ramping up as over the next 12 months or so. So we do have a couple of other projects in there, but this is just a lot going on, and I don't really have time to talk about it all. If you move on to the next slide, I can give you a bit of an investment summary. And our shareholders are leveraged to exploration success. We do have a lot of irons in the fire. We've got high quality assets in world-class areas and jurisdictions. That's Western Australia. We have made high-grade nickel sulfide and gold discoveries. We're serious explorers. We have a lot of news flow coming up, a lot of activity. We have meaty joint ventures which enable us to continue exploring and putting a lot of money into the ground without diluting shareholders. We're tightly held and we're in a strong financial position. We think we're very good value. Yeah, that's it. Thank you.
Thanks, Will. A great presentation. Look, I'm always amazed that in a tier 1 jurisdiction such as WA, companies are still getting their hands on such prospective projects so close to genuine mining centres. Step us back a little bit. How did you actually do it?
I guess when we started putting together the assets, it was 3 or 4 years ago. There were opportunities. There still are opportunities. I mean, the Goldfields is a very prospective, large area. It's all about exploring undercover, recognising opportunities, putting together consolidated pieces of ground. The tenement holdings in the Goldfields is quite complicated. A lot of the times exploration gets overlooked due to the competitive nature of land holdings at the time. So it's just about seizing those opportunities and being able to recognise where the value is.
Oh, well, you've definitely seized a cracking opportunity in the portfolio of assets. For example, Bearhaven project is right next to a previously operating nickel mine and 2 previous gold mines, but it seems to have been left underexplored. Yeah,
we like to think that we've thought outside the box a bit there. I mean, every geology is an interesting subject. Rocks behave differently to different methods of geophysics and geochemistry and things like that. But the ultramafic rocks that we're exploring, and they're altered in a way that they don't have a strong magnetic response. So the aeromagnetic imagery, you can't really tell where the ultramafics are. You need to drill holes. We drilled the right holes in the right place early on. So it's sort of now we're following our nose, and we believe we're onto a good thing.
Is that also partly the advancement of technology means that the work that you can do now is so vastly different to the work that could have been done 2, 5, 10 years ago?
I don't think we're doing anything too differently, but there certainly are a lot of technological improvements. I'd say more in the drilling industry, and the use of high-powered electromagnetics as well for picking up these massive sulfide deposits. But that has been around for some time. It's just about making the most of these technologies.
Now, you've got a joint venture partner, Western Areas, which is obviously in a tussle with IGO, and they're significant holders in the business. Are they supportive from a sharing data, sharing knowledge, sharing resources point of view?
I believe they are. IGO are very pro exploration at the moment. They're very pro nickel, hence the takeover of Western Areas. Most of the team from Western Areas at this stage will be moving on with the projects, and we've got a good relationship there. We'll find out in the next few weeks, but at this stage, it's all happy days, all pretty good.
Now, Norseman's sort of hit the map in recent times thanks to Galileo's recent discovery. Now, there's lots of different mineralization types through that area, but clearly a lot of underexplored ground and a lot of opportunity in Norseman.
Oh, definitely, yeah. I mean, we've got gold targets at Norseman that under lake cover, that under shallow lake cover. That's one type of target. That's what we first picked up that ground for. There's also PGE potential on the Jimbalana Dyke, which occupies much of the tenement, and that's the sort of target that Galileo have been drilling not too far to the west. So yeah, we're actually reviewing the PGE mineralisation and the potential of that project as we speak. It's certainly following the Galileo story with interest.
And there's nothing like, you know, a good success to light up a whole area that everyone's in the area gets a bit of that glow. But as you say, it can get you to re-look at what you may have done, or reassess, or look back on some of the data points to see, well, look, is there an opportunity here that we may not have thought of or may not have seen at the time? Yeah,
that's correct. I mean, a new discovery of a new type in a new area is great for the whole industry, and it's you just have to look at the some of the surrounding companies of surrounding Galileo. They've all bloody doubled in share price since the discovery, and it's only very early days. So I guess there's a lot of upside there, and yeah, we might be a part of that on that project. But our main focus is obviously nickel at Bearhaven.
Yep. And so zoning back on Metalhawk, as you say, you've got a strong pipeline of activity. What are some of the key things that investors should look at for the next 3 to 6 months?
A good question. We're going hard on nickel exploration at Bearhaven. So it does take, there is a lag between lab results and drilling at the moment. So we're going to have the samples that we've got in the lab now, we've still got 3 or 4, or at least 3 months of news flow coming out of them. We're currently drilling now. We've got more programs planned in July, August. Our JV partners are really ramping things up. They'll be diamond drilling out at Kanana in July at the latest. And the Falcon Metals will be down drilling at Viking, hopefully in the second half of this year. And that's the first drilling that's been done down there in years. And there's some extremely high grade, really attractive gold targets. So we're really looking forward to that.
A busy company, well funded, with great joint venture partners who are very active, all leads to strong news flow, activity, you know, keeps the market going and keeps the shareholders happy seeing you spending the money in the ground and working hard on your projects. A lot of opportunity for exploration success, a low market cap, Well, exciting times ahead for Metalhawk and its shareholders. Look forward to following your progress.
Thanks a lot, David. Thanks everyone for joining in. Cheers.
Thanks, everybody. Well, that brings an end to our presentation today. 4 cracking companies, 4 companies to watch. Keep them on your watch list. See how they perform, and we look forward to catching up with you, everybody, next week.